Hey, so it's been a while, but back with another edition of Mortgage Minutes with Mitch. And for the first edition of 2025, let's take a look and get caught up. Hey, so welcome to this week's Mortgage Minutes with Mitch. I am Mitch Jenkins, Senior Loan Officer with Your Home Financial. So what I started out as maybe a couple week break turned into a bit of a hiatus, and that's just because I'm kind of reassessing some of my strategies here and how I'm going to focus on my business going forward. So I'm going to continue to do Mortgage Minutes with Mitch, but probably more of a monthly outline as opposed to every single week. So where are we at for 2025? Well, the good news right now, we're in the best streak of daily improvements that we've been in well over 7 months. We're at the best pricing we've been in 2025 so far. Now this morning we did find out that the PCE report was pretty much as expected, so that's the Fed's favorite measure of inflation, and the year-over-year figures went from 2.9 in December down to 2.6 in January. So that's progress. We're getting towards that 2% target of the Fed, but we're not there yet, so definitely some work to do, but moving in the right direction. Now, the biggest things kind of driving mortgage rates right now are inflation numbers, but also job numbers. And the interesting thing is the BLS, Bureau of Labor Statistics, keeps coming out with these insane, huge job numbers. And the quarterly consensus for employment and wages, the QCEW report, that comes out quarterly and basically gives you the last 12 months of actual real job numbers. The BLS uses estimates, QCEW uses actual data. That's why it comes out much later. Now, for the prior 12 months, it showed that, well, the BLS overstated jobs by about 740,000. So, poof, those evaporated. They were never there to begin with. And that's about 62,000 jobs per month. So if I sound like a broken record, yes, I've said very similar things before, but the data doesn't lie. These job numbers are not quite there. So the employment figures we're seeing are just not matching up with reality. Still happening. Now, what's starting to contribute to mortgage rates as well are the threat of tariffs. Because a lot of people are kind of uncertain what's going to happen with tariffs. That could drive up inflation, which wouldn't be a good thing. But at the end of the day, what it's doing is causing a lot of investors to move money out of the bond or out of the stock market and into the bond market. So that's actually good for mortgage rates when there's money coming into the market. Another big piece of that too that we really haven't seen lately is the Fed is actually going to be reinvesting a lot of their money back into mortgage-backed securities. So since May of last year, they've been kind of letting about 30 to 40 billion run off of their balance sheets. So now they're actually middle of this year, they're going to start taking that money and reinvesting it back into mortgage-backed securities. So it's kind of a simplification of it, but what that means is more money going into the bond market, which should help alleviate some pressure and reduce mortgage rates. So what's the outlook for 2025? Well, we hope to see some modest improvement. I mean, if you are waiting for a significant drop in mortgage rates, it's probably going to be a while. So we hope to see some small gains in pricing and some little victories here and there. But if rates are holding you back, I don't think that's a good idea because values continue to go up. We're roughly 5% year over year as far as home values go. So for every year you wait, yes, we could see an improvement in rates, but you're also going to be paying more for that home. So my strategy still remains, get in now while you can. You can always refinance later once you own a home. So thanks so much for watching. It's great to be back. Again, I'll keep these videos probably monthly and maybe share some smaller tidbits throughout the month as well. So thank you so much for watching, and we'll see you next month.